My next guest says a half-point cut would send the wrong message to markets, and he prefers the Fed taking a more cautious approach on easing. Joining us is Tom Hancock. He's portfolio manager of the actively managed GMO U.S. quality ETF, but he's just in a good mood because he owns Oracle. Tom, welcome.
Hi, Kelly. It's great to be here.
Hi. I think was Ellison back to being the second wealthiest man in the world. Now, the shares are outperforming today. I don't know what the news was, maybe an upgrade, but this has been a monster stock.
Yeah, Oracle's been a great stock. They're really going through a change of narrative over the last few years. If you think back, what is Oracle, right? You'd think of them as this sleepy software company that, sure, no one ever gets off an Oracle database, or maybe no one gets on it either. So that's not what they are anymore. They're a cloud infrastructure play. So last year they had their earnings call. They also had their analyst day, Oracle Cloud World, and they really laid out some ambitious targets for growth. They're talking about mid-teens revenue growth over a number of years now. So I think it's a little bit slow for the market to think of them quite that way, but it's certainly catching up, and there's certainly a lot of momentum in the stock now.
Yeah, it's up 6% today and up, I mean, what is that? 25% in 3 months. So, I half jest, but when you look at sort of your stocks and the economy more broadly, do you think a quarter or half-point cut is more appropriate?
Well, honestly, when we look at the stocks, it's probably a little bit indifferent for most of their businesses where we're trying to play off long-term secular growth trends. That said, I do think 25 and 50 send very different messages. 25 sends okay, we've licked inflation, now we can normalize rates. That's a very positive message, whereas 50 is a little more, there's something wrong here, we're worried kind of message. It doesn't follow the normal cadence or trajectory of Fed moves. It's sort of saying we know something that you may not have seen yet. And whether or not that's actually the case, I think there'd be a lot of fear amongst portfolio managers, investors in stocks, that is a sign of something that's a little bit off. And so speaking for myself, I'd probably rather see the lower move, even if we kind of all know, wink, wink, that the next 25 basis points are coming anyway.
Yeah, I don't know if I'm glad that you raised the point, and I've always wondered if it's really that seriously taken as a signal to markets. But if you're saying, look, to you, it would be kind of a worrisome sign if they go a half-point cut. Others have made the point every half cut has preceded a recession and so forth. So there is some history behind it, but you sort of think intellectually if it's the right thing to do, if the neutral rate is much lower than where we are right now, why not get there?
Well, I think the reason to do that is it's not so much about the rate, it's about the signal to the message. And there is a little bit of self-fulfilling prophecy here. If you spook the market out by there being a big cut and markets sell off, then that could actually be a negative impact on the economy. So I think caution is not getting to lower rates more quickly. Caution is sort of moving slowly, definitely flagging your intentions before you get there. But I think the sort of hints of talks about maybe it should be 50 rather than 25 that you're kind of coming out through the smoke signals is a little bit more like, well, we can't cut 30, but we kind of want to cut 30, so we'll just turn up the temperature slightly on the 25. That's the way I'd interpret this.
Maybe it was Europe or somewhere I thought they just cut rates by 60 basis points. And at some point, we're in a range anyway. I would love them to come out and say, no, we're cutting by 30 basis points or getting rid of the range. So why not be creative and deliver the market when it needs? This is probably something I should have mentioned with Steve, but I just want to note it for the record here. We've seen a trio of Democratic senators now calling on the Fed to lower interest rates by 75 basis points. Warren, Sheldon Whitehouse, John Hickenlooper. Would that on the margin push you towards or the market, you think, towards thinking, okay, they're probably not going to go 75, but there's enough pressure that maybe they will do the bigger cut?
Yeah, I don't think that kind of commentary is going to have much impact on the Fed. I think that's more for a different audience than the Fed. Maybe they're trying to normalize a 50 basis point cut a little bit by throwing out a bigger number. But at the moment, I wouldn't really take any of that seriously. And if we start to see a lot of talk like that coming out of the Fed in the short term, I'd be worried that they really were seeing something.
Sure, fair enough. Let me just bring it back for a second to your major holdings. I mentioned Oracle already. You've also got names like Texas Instruments, Thermo Fisher, Microsoft is one of your top holdings, Alphabet. I mean, you basically have more or less the Mag 7 X Tesla, call it the Mag 6, a couple of related names, and then, stalwarts like United Health and J&J. What do you say to investors? I mean, is this the kind of holding that you think is better for the long term or better for something that could kind of really run into year end? What's the thought process more broadly?
Well, for us, we're always focused on the long term. And so that's the horizon over which any of those holdings we think makes sense. Of course, the long term is made up of a lot of short terms on the way to get there. So there's nothing negative we'd say about the short term, but we actually kind of tend to like stocks where we can't see the immediate catalyst, because if everybody else sees it, then it's probably already gone. Like some of these companies that you mentioned do have catalysts. So Texas Instruments just gave some really good clarity on their investment guidance going forward that I think is really helping the stock. And they're probably the government's favorite semiconductor stock, because they really are investing in domestic capacity in a way that no other company is. Or Thermo Fisher, it's the one healthcare stock on that list. They have an analyst day coming up later this week where I think they'll really be able to lay out the framework that they can achieve the kind of durable growth they've been able to do in the past, and we think we'll be able to do going forward. But these are all long-term plays from our point of view.
Really